So the important thing to understand here is that a support and resistance level for us is just an area where we expect something to happen with the price, okay? It could be that the price breaks through it. It could be that the price bounces off of it. And there are certain things that we look at to indicate what the price is going to do. So what I don't want you guys to do as traders, okay, is say, well, I'm just a breakout trader. All I look for are breakouts, and if there are no breakouts, then I won't take a trade. And you know the reason that that's a problem is ultimately what's the word for it? You're kind of putting a straitjacket on yourself. Okay, so whereas if you were to say, if I'm just going to see what price does when it gets to this level, you're opening yourself up for so many other opportunities. If you're just looking for breakouts, then one, you aren't going to get as many opportunities, but two, you're probably going to make up opportunities even if they don't exist because you aren't going to have as many. So you'll be like, well, that kind of looks like a breakout, so maybe I could trade that. Rather than saying, I'm just going to trade the price action on the charts. I'm going to identify key areas, big levels where I expect something to happen. And when price gets to that level, I'm going to take a trade. So if it breaks through, I'm going to take a breakout trade. If it bounces off of it, I'm going to take a bounce. And there are various ways that you can get into or out of trades based on that. Who here trades support and resistance already, or who incorporates it into their trading at this particular moment in time? Here you do. Excellent, Michael. Of course. And who here will only trade a breakout of support and resistance or only trade a bounce off of support and resistance? Both depending on the bias. Excellent. Is there anyone here that will only do one or the other? You try to do both, but don't always work. I guess if it doesn't always work, you're probably one of those people that you kind of get caught up in the moment. So one time you're buying, then you're selling, then you're buying, then you're selling, and it just does more harm than good to your account, perhaps. So, excellent. So I've got an idea as to what people are looking at. So how do we go about identifying supports and resistance, and how do we trade it? Well, me personally, I will identify support and primarily from the daily chart, okay, or the weekly chart. So I'm looking for big levels. When you're identifying a support and resistance level, you're not looking for these tiny little levels that nothing is going on at in the charts. You're looking for levels where price has had a reaction, all right? So, for example, some people might term this here as a resistance level. People put that on their chart and say, well, that's a resistance level. That, for me, means nothing. That's just price action. The market is going back and forward, and that's all it's doing. The best way to identify supports and resistance levels is to really zoom out of your charts. So you're kind of hiding all of that tiny price action in between, and you're only looking for the biggest levels. So looking at this chart here, we'll go and identify the levels. Looking at this chart, I'm looking at that level there. That's a big level that price has come to, and it's reacted to it. Okay, that's a big level. Over here, again, that's a big level. We could put in this level here as a support level as well, because there's a big reaction to that level. It looks close together, but it's actually 100 or so pips apart. Over here, that's a level that price has clearly come down to, and it's been sold off from it. Over here, okay, so let's zoom out of our charts. Let's come back a little bit, and we want to see how it reacts in the future, okay? So as if we were at this part in our charts here, we would say that that's a resistance level, that's a level we'd want to pay attention to, and so is that. Okay, so we've identified it here. Then let's see how price reacts to these levels. Once you identify them, how they come and react to the levels. Now, the important thing to understand about support and resistance level, and particularly the FX market, is we're not looking for pip perfect touches. We're looking for the reaction to the level. So we've identified this level here, all right? We identified this level in the past. What we would then be looking for the next time the price approached this level, so we're there on the 23rd of November 2011. The market goes away from that level. We've identified this level here, the support level here. Do we trade as soon as the price gets to that level? No, we wait to see what the price is going to do. So the price comes down to this level, it meanders from it, and then it breaks down. Okay? From this perspective here, you probably would have been stopped out once or twice, in all honesty. I wouldn't have traded this initial one here, but when it broke back above, I would have been in on that trade there, and I would have been stopped out here. All right? But there's nothing you can do about those moments there. Next time price broke back up above that level, because it failed to get below here and hold below here, I would have been in again. I would have made my money back and then some. But we're looking for the big level. So the next time the price gets to this level here, right, this big level where we can see a big reaction. So the reaction that we're looking for is we're looking for price to be trending up towards a level, not meandering, but really going up to it in a big way, and then to be sold off from that level. The next time price gets up to that level, we want to look at the price action. So I want to see price stall at a level. I'm not going to trade it just because it gets up there. I want to see something happen. And it might be that you need to break down into a lower time frame to see that. But ultimately, I want to see the price attempt to get beyond that level and fail, which is exactly what happens here. The price attempts to get beyond that level, it fails. And then I would be in here somewhere around this level at 2.0607 with a stop above, and then potentially looking for the market to go down to the 1.98 level. So you've got a massive risk reward trade on the table there. No indicators, just pure support and resistance, and looking for reactions to the level. All right, so that's a big level. We've identified this level here, back here in the past. Next time the price gets to that level, we want to see something happen. So again, previous support becomes resistance. So which one was this level here? Previous support there. Next time the price gets to that level, if it fails, so we're not trading initially when the price gets to the level. We want to see the reaction. We want to see some sort of stalling price action at the level. Next time support becomes resistance, price trends down. Very nice. It gets down to this level here and it bounces off of it. Now, I'm probably teaching a lot of you guys to suck eggs because you've seen this a million times before, right? You know that it happens. Am I correct? So what's the problem? If you know that it happens, why can't you make money from it? And my guess is that you're probably trading the levels blindly. So for example, you're waiting for the market to come up to this level. It would have worked out here, but as soon as the market gets to that level, you sell. That's not what you want to do. You want to see a reaction. So looking at this market here, now that the market's at this level, I wouldn't be selling as soon as see if we can get some. I wouldn't be selling as soon as the market gets up to this level here just because it's at that level. I'd wait for the price to react to that level and then break a previous level of support. So once the price has got up there, on the close of this candle here, and then the break below the lows sort of there, that's where I would be looking to enter. I'd have my stop above the highs there. And initially, I'll be looking for a profit target somewhere around there. So we've got a nice 1-to-1. And if we get beyond that level, then we can look at the next support level, which is this one over here. So you kind of got 1 or 2-to-1 on that particular trade there. Okay, simply your stops take you out. Lovely. Simply by looking at the reaction to the level. Remember, you're looking for a bounce from that level, okay, or you're looking for the market to break out from it. You don't want the market to meander at that level. Again, the market breaks through that level, comes up to this level. What happens when the market breaks through a level? You're looking for momentum, right? So the way that we would trade this is if we traded the initial break there, we'd have our stop somewhere down here. If the market failed to get above it, we'd have our stops at break even by that point. And by the time the market turned around, we would then be back out again. And we would be trading the failure from that level. And to be honest with you, the failure of a support and resistance level is a much higher probability trade than the breakout from it.